Hello everybody and welcome to Unit 3, Intermediate Accounting 2. I'm Maria Simmons, and this week we are going to go over chapters 18 and 19. Chapters 18 is Introduction to Managerial Accounting. The learning objectives for chapter 18 were: define managerial accounting and understand how it is used. Classify costs used in managerial accounting. Prepare financial statements for a manufacturer, including a balance sheet, income statement, and a schedule of costs of goods manufactured. Describe business trends affecting managerial accounting. And describe how managerial accounting is used in service and merchandising companies. And what I wanted to do was go over an exercise with you. The one I chose to go over was to prepare a schedule of costs of goods manufactured. And that is in regards to learning objective number 3. So I wanted to show you the appropriate format for a schedule of costs of goods manufactured. So let's take a look at that. How to prepare a schedule of costs of goods manufactured. So here is your information. Gives you the cost of goods manufactured, the amount. It also gives you the balances, beginning and ending balances of direct materials, work in process inventory, and finished goods inventory. And it gives you other information such as depreciation for plant, building, and equipment. It gives you direct material purchases, insurance on the plant, sales salaries, repairs and maintenance on the plant, indirect labor, direct labor, and administrative expenses. And the requirements are to use the information above right here to prepare a schedule of cost of goods manufactured, and it also wants to know the unit product cost if Wilson manufactured 3,700 lamps per year. So let's do requirement number 1. Here is the format for schedule of costs of goods manufactured for Wilson Corp. All of the information you need was given to you on the previous screen. The beginning work in process inventory, 109,000. Need to put that over here. Direct materials used. So you want to use the beginning direct materials. Add in purchases of direct materials, and that gives you direct materials available for use, and the ending direct materials. Take that out, and that will give you the direct materials used, 187,000. Direct labor, which was also given to you, 121,000. Then you want to figure manufacturing overhead. That includes depreciation on the plant, building, and equipment, insurance on the plant, repairs and maintenance of the plant, and indirect labor. So that then you total the manufacturing overhead. The total manufacturing costs incurred during the year, 397,000. That is the total of these three. Total manufacturing costs to account for, $506,000. Add those two together. Ending work in process inventory. And that you have that. It was given to you, negative 62,000. So your cost of goods manufactured is $444,000. So this is a format for schedule of costs of goods manufactured. And this is a format I want to see. I want to see it all laid out. This is how it should be. So requirement 2 asks, What is the unit product cost if Wilson manufactured 3,700 lamps for the year? So the unit product cost is found by taking cost of goods manufactured divided by the total units produced. So that's 444,000 divided by 3,700 lamps, and that equals $120 per lamp. So that's what it costs for per unit to manufacture it. Chapter 19. It's about job order costing. Job order costing, and the learning objectives for Chapter 19 are: distinguish between job order costing and process costing. Record materials and labor costs in a job order costing system. Record actual and allocated overhead costs in a job order costing system. Record the completion and sales of finished goods. Adjust for over-allocated and under-allocated overhead. And calculate job costs for a service company. We are going to go over the sixth learning objective: calculate job costs for a service company, using job order costing in a service company. So here is the information that is given to us. It gives you a total cost, and it says Chance Realtors, a real estate consulting firm, specializes in advising companies on potential new plant sites. The company uses a job order costing system with a predetermined overhead allocation rate computed as a percentage of direct labor costs. At the beginning of 2018, managing partner Andrew Chance prepared the following budget for the year. It gives you direct labor hours for professionals, direct labor costs for professionals, office rent, support staff salaries, and utilities. Maynard Manufacturing Inc. is inviting several consultants to bid for work. Andrew Chance wants to submit a bid. He estimates that this job will require about 180 direct labor hours. So your requirements for this is to compute Chance Realtors' A, hourly direct labor cost rate, and B, predetermined overhead allocation rate. Your second requirement is to compute the predicted cost of the Maynard manufacturing job. And your third requirement is if Chance wants to earn a profit that equals 25% of the job's cost, how much should he bid for the Maynard manufacturing job? So we'll start with learning objective number 1. We'll do with requirements 1A and B, sorry. And here it shows you requirement 1A. Take the direct labor costs, which were given to you, 2,200,000, and you divide it by the direct labor hours that he had budgeted, and that gives you the direct labor cost rate of $160 per direct labor hour. And the requirements for 1B, the indirect costs, the office rent, the support staff salaries, and the utilities. So the total indirect costs were $1,980,000. So the predetermined overhead allocation rate is found by taking the total estimated overhead cost and dividing total estimated quantity of the overhead allocation base. So that is $1,980,000 divided by, and that is the direct labor cost of $2.2 million, and that equals 90% of the direct labor costs. So that is how you figure requirements 1A and 1B. Requirements 2 and 3. Requirements 2 was to compute the predicted cost of the Maynard manufacturing job. So you want to do that by finding the direct labor it would take 180 direct labor hours, so at $160 per direct labor hour, so it costs $28,800, and the indirect costs would be $28,800 times 90%, so that would be $25,920. So your total predicted cost for that job would be $54,720. That would be the predicted cost. And your requirement number 3 wanted you to find if you wanted a profit of 25% of the job's cost, what should you bid? So you find that the predicted cost of $54,720, and you want a desired profit of 25%. So you add 25% of that on top of it, and that equals $13,680. So your required service revenue, or what you would need to bid, would be $68,400. So those were what I wanted to go over today, just a few things in chapters 18 and 19. This week you also have a midterm quiz due. You have to finish it all in one setting, so please don't forget to do that and give yourself plenty of time, because you won't be able to go back into it and finish it. I finished grading your exercises from last week. I'm going to post grades, and I'm going to send comments and corrections to you like I have been doing. So if you have any questions, please continue to email me like you have been, and I hope you all have a great week. Bye.